There have been constant growing calls for the CBN to shift its stance and ease off on forex tightening, currency management, of course. In the days ahead, we'll talk more about that. Of course, it is going to drive the conversation I'll be having now with Ayodeji Ebo, who is the head of research at Afrinvest, as we take a look at the state of the economy. Generally, what will the committee members be up against as they have conversations that will last for 2 days before the announcement of key decisions on Tuesday? Good morning to you, Ayodeji. Thank you so much for joining me on the program.
Good morning, Harriet. Thanks for having me.
Now, let's start from Friday, where, the weekend when the National Bureau of Statistics released GDP figures for the first quarter of 2016. We also saw very disappointing unemployment data, about 12.1% drop in unemployment data. Now, some people say, some analysts have said that it's a reflection of the state of the economy. Do you share this view?
Yes, exactly. It's a reflection of the decisions that the monetary policy as well as the fiscal managers have taken. For us, we see this as self-inflicted because we feel it can be avoided. When you look at analyze the data, you discover that in industry, which account for about 30% of total GDP, contracted by about 8.4%. So this, in our view, it can be linked to the restrictions around the forex market. We have always clamored for some form of flexibility around the forex market. It's so obvious when you see the number of manufacturing companies that are closing down as a result of their inability to access the dollar at the official rate. Even buying at the parallel market rate will make them unprofitable. And we saw for some of them are not even able to import raw materials. Some of them are not able to replenish their stock. And this dovetailed into also the figure we saw at the unemployment rate, which rose to 12.4%. About 500 people that had full-time job as of December lost their job within a quarter, which is alarming and worrisome. I feel the economic managers needs to now sit down and come up with a more coordinated policy that will help tackle this from the roots. It's the upcoming MPC meeting is also going to be one of the major focal points, is how they need to address the current challenges. And we expect that they should be able to come up with policies around the forex market that will help resolve these current and persistent challenges we've been having within the manufacturing industry.
But then taking a look at some of those policies, one might wonder, at this time when there really isn't any breather coming from even the global markets, we're still seeing oil prices fluctuating around $47 and $50 a barrel. You're not seeing any easing up of militant attacks here in the Niger Delta. And you're still seeing pressure coming in from the forex market. At the parallel market, we're still seeing the Naira trading as around 350 and 360 Naira to the dollar. That's against the official market. So how do you think the members are going to deliberate today?
We feel, following logic, based on what we expect that the CBN MPC should do is to review their past policy, assess its impact, and when you discover that your policy that you have that have been applied in the past is not resulting to the desired result, then you need to change your position. You need to change your stance based on the stance of the CBN not to adjust the currency. We would see from the current development within the oil space, the oil sector, that marketers can access the dollar at 285. Also buttresses the point for the need for an adjustment. of the naira. Apart from that, it's beyond just a devaluation or an adjustment. We feel the restrictions accounted for significant pressure that we've seen on in the forex market or within the parallel segment of the forex market. About 30% of the initial 40% or the 41 items constitute about 30% of the total utilization of the forex at the official market initially. Now, about 30% again of the oil importers accounts for the usage at the interbank market. So you are effectively moving about over 50% or 60% to the unofficial or the autonomous markets. So we feel that the CBN needs to come up with like a second, reintroduce the interbank market where you can freely trade the naira at whatever rate that you that will reflect market rates, and that will even attract inflows from diaspora, and it will also help reduce the pressure on the CBN.
Now, Ayodeji, you know, taking a look at those GDP numbers, already there have been comments that Nigeria is already in recession because you have a negative growth of 0.38. Now, if the Central Bank of Nigeria's monetary policy meeting decides not to make any significant move on the monetary policy rate, on the cash reserve requirement, or even foreign exchange, what's the likely scenario that might play out?
Yes, thanks for that. It's before we can say we are really in recession is when we record two successive negative GDP growth rates. And looking at what has happened between April, May, we are almost in June, it's very unlikely that we will not record another negative growth rate. We have only June to see whatever we want to do for us to avoid a negative growth rate. But we expect that the CBN should focus more on how they want to grow the economy. The stance of the CBN, of the MPC, to maintain positive real interest rates, we feel it's unachievable because the current interest rate is even attractive enough for foreign investors. So focus should be more on growth rate if we want to really avoid a recession. It's very unlikely with some of when you look at what has happened between April, May, power supply has dropped significantly. There have been increased vandalization of pipelines. You also know the few days of strike will also have affected productivity, the volatility we had in the forex market. The combination of all these factors would impact significantly on GDP, and it's very unlikely, and it's not good. It's not good for the economy. So we feel that there should be like a state of emergency. Emergency should be declared to see what we can do to resolve the problem, the lingering problem.
But then how do you expect investors to play? Do you expect them to continue? Because right from last week, we already noticed cautious movements, cautious sentiments by investors at the fixed income segment of the market. We saw bearish trading at the treasury bills and the bonds market. Do you expect to continue to see that cautious movement by investors ahead of the decisions that will be announced tomorrow?
Yes, we expect that, especially at the equities segment of the financial market, we expect to see a lot of wait and see attitude. Even at the bond market, a lot of investors have exited the market in anticipation of a higher MPR. But we feel that if the CBN does not take any action regarding the forex markets, regarding we expect that MPR should be retained because just increasing it will not solve the problem. We feel if they don't do anything, we'll see the market bleed for the rest of the week from Wednesday when when the result or the resolution of the meeting will be announced.
Well, thank you so much, Ayodeji, for your perspectives this morning. Have a good day.
Thanks for having me.
Ayodeji Ebo is the head of research at Afrinvest. They're giving us his